my favorite tax strategist, my favorite accountant in the entire world. Cindy, you can probably have to pull this microphone down here. Welcome, and we have you in every year, and I appreciate you so much. And so let's just jump into it. And we don't get political. This has nothing to do with politics, but with every administration, there are changes, and creates a lot of confusion, creates job security for you. What are some of the changes that we need to be aware of over the last year or so, if any?
Oh, what's exciting is the changes that were in effect in 2017 are now permanent. So with the One Big Beautiful Bill, made everything permanent. It made our accelerated depreciation, or you've heard 179. It's funny how people educate themselves and they're like, I want to take 179. It's like, well, how do you know what that is? Because I looked it up. But so we can take accelerated depreciation on different things, on rental properties, on your cost segregation. It breaks it down so we can take more now when you do the purchase. And so the beauty is they've been set in stone for now, meaning there was an expiration when they were created in 2017. We had an expiration of the end of 25. That went away. Now they're in stone. This is the tax code. We don't have expiration dates anymore. So now it's a better planning tool for me. Mm-hmm. You know, even last year before it was all in effect, it was like, well, as soon as we see what happens, then I can tell you, right?
Right.
That's not the case. I can tell you now what it looks like today. Doesn't mean it won't change down the road somewhere, but today we're good for 2025 tax year and the 26 planning.
All right. One of the things I always like to start off with, we are all fearful. I mean, it creates incredible angst when we hear the term IRS and the IRS tax code, and people hate the IRS tax code, and they think it's our great enemy and so forth. And one of the things that you taught me years ago was you basically just said, you know, I'm thinking about it the wrong way, that the IRS tax code really is our best friend because it is the roadmap to taking advantage of write-offs and minimizing tax liabilities.
Absolutely. And Tom Wilwright, who's been my mentor for years, he talks about it and he says, partner, the IRS wants you to partner with them. We want you to know what the tax code is. The issue might come, you know, the question isn't, is this deductible? The question is, how do I make it deductible? So I had a couple sitting across from me and she was willing to do everything and he wasn't. And I said, okay, then the price of that is you might pay some taxes then where she's not going to, right? So it can all work for you if you're willing to do it.
Right.
Yes. And don't fear them, join them. Yeah.
All right, so I've got some notes here. I know you've got some notes there. At what point, one of the biggest questions that I get with working with real estate agents is, at what point do we create a PLC or a PLLC, and what are the advantages, and why do we want to incorporate our name?
So starting out, I would always get your PLLC as a real estate agent, because then that allows your tax preparer or whomever that might be to decide when to do that. If you've set it up, if I became a real estate agent in January 1 of 25 and I create my PLLC, that gives me as the preparer all of 25 to decide if I should move you over to an S Corp or leave you as a sole proprietor. The advantage of an S Corp is you save 16% on your taxes, just right off the bat. So I think we all should. And when is the benefit? The benefit's when my profit is $50,000. That makes it cost effective if I were doing your stuff to move it, right? I typically can save a brand new client about $15,000 on their taxes. So my fee is $6,500 or more. But if I can save you $15,000, wouldn't you want to pay the $15,000?
Right.
You know, the fee to save that.
It's a great buy.
Before I met you, my tax bills were between 30 and 40 every year, and it was just so painful. And then when we hired you, we started getting money back. and or it just dropped considerably, and I
Mhm.
kept thinking, okay, we're gonna get audited here or something like that.
Mhm.
And then I just started doing my own research, and I'm like, my gosh, the stuff he's talking about is like really
It's
legit,
really
and
real.
it is far worth the investment that we make for our taxes
Mhm.
because of the amount of money that you've probably have since we've started working together probably saved me over 120 to $150,000. And when I take a look at what I was paying prior
Mhm.
to BC before Cindy.
That's great. Well, okay, and it's not that your taxes were done wrong. They were not wrong. They were just not done in your best interest. There was no thought, and that's what happens. I get somebody in front of me, and they're on a sole proprietor, and I just had one come across my desk, and I think he paid like 350,000 in taxes. He's running a couple $1 million as a sole proprietor. I would never do that, and I see. I'm even flabbergasted that somebody would do that. And
Right.
why would you pay those taxes and not get a second opinion, right? So back to real estate agents. Always, you want to be an S corp. If you have a property, we're going to put that into a partnership and file as an LLC as a partnership. So that's where you can see a PLLC. I want you to file as a S corp. If you have rental properties, I want you to file an LLC and file as a holding company in a partnership.
Right. Which I've done. All right,
Yes.
let's talk about write-offs.
Yes.
Um, is there are my write-offs the same as a 1099, my check written out to Michael Weinstein as opposed to it going through my PLLC? Do I still have the same write-offs, and are there more write-off advantages of running everything through the PLLC?
No, they're the same. So whether I run as a sole proprietor or a partnership or a PLLC, no, it's all the same, but it's how you look at it. For example, the things that my clients that come to me, it's their first time. It's the auto. It's keeping track of everything. The car washes. If you have that membership to the car wash place, it's the car insurance because if you're a real estate agent, you're probably paying a commercial fee if you're going to have clients with you, right? Um, any repairs to that car. And then what happens? So we get this all the time. Well, I bought a new car in August. And I'm like, okay, but you had auto expense from January to August. Oh, well, I didn't think about that. I just thought the new car mattered. So they only kept track for the new car, right? Business use of the home. That's a big one I see people miss. The IRS changed the code back. We used to do square footage. What was the square footage and how big was my office? And now it's per room. So I do a percentage. So it's a percentage because of the rooms you have. Um, and then they miss what are the repairs in that home office. Okay, so I had to replace the air conditioner and then we had to redo one of the rooms. Well, we're not going to go take the whole air conditioner. We're going to take a percentage of that air conditioner because I work out of my home, right? That's a big one that we see all the time. And then the Augusta rule. So the IRS allows you to rent your home out for 14 days or less in a year and not pay any taxes. Well, so back when we had the Super Bowl here and everybody was renting their houses on the west side for $5,000 a night, they probably all claimed it on their taxes and they didn't need to, right? But I want every
Oh my.
business to use the Augusta rule.
Okay, and then how does it benefit me? Like maybe every 2 weeks out of every year, I just have my mom come up and I charge her rent.
But that's not what we're going to do. We're going to have your business rent your house from you.
Okay.
So my accounting practice rents my home from me for 14 days. It's another way for me to take money out of the business tax free. And it's easy to figure out those rents. When we had the Super Bowl here, I told everybody, you probably rented your house during the Super Bowl week, right?
Yes, the answer is always yes.
Yes. And then another deduction that we see people miss are paying your kids. The IRS allows you to pay your kids age 7 to 17 tax free year. And I think this 2025, it was like 15,750. Well, so I had a gal, she has 7 kids, and she's like, okay, that's a lot of money out the door January, right? And so what we did is we earmarked 3 accounts for kids' activities, 2 accounts for the IRS, 2 accounts for her taxes. Because the 3 accounts were enough to pay for kids' activities and the things the kids were doing that were now going to be deductible.
What are some other things that we are not as far as write-offs? Because like one of the questions that's always been kind of confusing because there were changes years ago when I started. I had a shoebox full of receipts. And it was just, and we do a lot of meals. And we take a
Mhm.
lot of clients out, either golfing or take them to happy or whatever
Mhm.
the case is. And there was always this category of meals on there. I don't do that anymore because I've kind of reclassified it. If I'm taking a client out, to me, that's advertising and marketing
Mhm.
because that's really what I'm doing.
Mhm.
Is there is there an issue with meals, or how should we as agents handle meals with clients?
Okay, so let's talk about meals directly. So the IRS says that you don't have to have the receipt if it's under $75 and it's in your planner who, what, when, where, and why. I live by my planner, so I'm not worried about the documentation there, right? Now, as far as moving it to advertising, there was a meeting I used to go to in Goodyear, and the place we would go at would have breakfast, and I would put my breakfast under my advertising because I'm never going to go there and have a meal. I only went there to get clients, right? So it's how can I justify it as a business expense?
Mhm.
Yes. Now, if I have your numbers and I'm looking at it and I feel like, oh, it's too heavy based on what your income might be, then I might move some of it or switch some of it. I have a client, he eats out a lot, but the amount of meals that he had didn't support the income. Okay, I'm not going to put that on the tax return. Like,
Are we talking
that's
about
a
me?
skew.
Because I go out and I have a lot of meals, Cindy. I don't
No, it's not you.
know.
But so when you look at also when I do your taxes, I'm looking at it. How does this flow? Is it cohesive? Is this something the IRS would probably question? Yeah, if I have $40,000 of meals and your income's 100,000, yeah, we might have a problem.
Okay.
Yeah, and I'm going to bring it up. I'm going to say, hey, let's talk about this for a minute, and you tell me. And usually there's a different story. There's a different story about what happened and why it was ended up in the meals category.
What are some things that we should be doing, throughout the year to prepare for our accountant, whomever it is? Because I had an accountant years, and Todd and I had the same accountant. That's a
Yeah.
there's a reason why he's not our accountant anymore, but that's neither here nor there. But it was like he just said, just throw everything in a shoebox.
Yeah.
And then I had back then we had this thing called the Franklin Planner,
Oh, that's right.
right?
Yes.
And I would keep track of my miles and whatever the case is. And throughout the years, I've gotten busier. I find the more money I make, the less organized I am. Probably the harder I make your job. But what are some things? Because it's not too late. We're in February.
Mhm.
But what are the things that we should be at the very least doing to be prepared to file taxes the following year?
Well, if you have a bookkeeper, that's great. They can send me the financials because I'm a
And that's what I've finally done
Yes.
is I've then hired the bookkeeper, and she asks me questions here or there, and then she does whatever she
And I
does,
know
sends
it
them
was
to you.
painful to start, but the beauty is I can go pull your numbers. I can go pull your profit and loss anytime and just make sure we're within what I'm saying, right? Keeping track of it's that documentation, keeping track, know your numbers, and talking to me. I met with a client yesterday and I said, okay, he's an ER doctor, and if his numbers stay status quo, I don't need to talk to him in May, but I definitely want to talk to him in November, December, right? I want to make sure he paid the kids. I want to make sure there were no bonuses. Did they buy a car? I want to look at everything. So keep track of where you're at and know your numbers so that then I can see them. So if I email you and say, hey, how are we doing? Can I see some numbers from you? If you're pretty much the same and your income hasn't gone up by like 25 grand, we're going to be the same. But if it's November and you go sell that $1 million house, I need to be talking to you. We need to be looking at what we can do to save that money.
So one of the things would you recommend and I do this, when it comes time for us to buy another car, sometimes there's a huge benefit or difference of buying it this calendar year as
Yes.
waiting to the January 2nd
Yes.
of the following calendar year. There's very little that we do without running by you.
Correct.
But is that a thing?
Yes, absolutely. That's a thing, especially because a vehicle is our best deduction. It's a chunk anymore, but that means, okay, so you can't go buy a Corolla for 19 grand and think we're going to save a bunch on taxes because we're not. It's when you go spend $50,000 on a vehicle that I can really do something with. Then if you buy the vehicle that weighs over 6,000 pounds, then I can really do something with that, right? So I want to know where your numbers are. Then if you're going to buy a vehicle, if it's just the Corolla that you're going to buy for 20,000, it doesn't matter.
Just go.
Yeah. Yep. Because then we're max on what we can take. We can take the 20,000 in that year. Yes.
And so and this is just more of a tip for other people. One of the things that I've done with you in the past, I have a SEP IRA and things. I'd rather take all my cash and invest it in real estate. I've experienced far better returns, but I've got the SEP IRA. And so when we get ready to file taxes, you tell me this is how much you're going to owe. But then there's an advantage of if I take a percentage, let's say I owe the IRS $10,000 and you say, hey, we can write off 6 of it if you take that 6,000 and put it into a retirement account.
Yes. And that's another point about communication and talking to me. And I say that to everybody. So if I get your taxes and it's not what we had looked at in November, December, then I'm going to say, okay, here you are. Either you can pay the tax bill or you can do this, this, or this. Put money into a 401k, IRA, whatever it might be, to get the tax bill down. And the beauty of your investments account, so with a SEP, it does need to be set up already, but you don't have to fund it until April of the following year for the back year, which is just crazy.
It's crazy, yeah.
And then if you file an extension, we don't have to even fund it till October, which just seems even crazier. But yes, those are the rules. Yeah.
All right, so I don't want to throw my wife underneath the bus because this isn't really her.
Probably not.
No, because every year she gets mad at me. I'm the king of extensions. Like I think I have filed for an extension every year that I've been in real estate, and my wife, it drives her nuts because my wife is so organized and she is ready to go, and we end up filing for extensions. What are the disadvantages to filing for extensions? And then I want to get into quarterly payments.
Okay, so the disadvantages is we're putting off. I'm still working on 25, and we can't look at your 26. I want to get your 25 out of here, and let's start talking about 26, especially if it's a bigger year, or you have a bonus coming, or you have more homes listed than you've had before. So I want to know where we're at. The disadvantage is I can't focus on your 26 if we're still talking 25 typically.
Okay. All right.
You're not there yet. You're not ready to.
So the moment that I have a PLLC and I start running commissions through my PLLC, do I need to be worried about quarterly payments? We always hear about quarterly payments. I don't think I've ever made a quarterly payment, so I'm sure I pay the piper for it down the road.
No. So what we've done with, if we can talk about your taxes or any of my other clients.
Yeah, let's talk about that.
We're going to make sure, because I don't want to have to remember that day either. So I adjust my payroll so that I don't have to make an estimated payment. I've made sure I've added you to payroll, having equivalent or sometimes more. If we know it's going to be a better year, we've adjusted your withholdings. So Austin and I are really good about making sure, okay, we're going to
Austin's in the house.
Yeah.
Hi,
Yes.
Austin. Good to see you, man.
Yes. So we are looking at your numbers always. Do we need to adjust that? Because people don't want to make quarterly payments, and I don't know why. They just don't.
All right. So back to, obviously we've been talking about a lot about agents and taking advantage, and everybody has Cindy's email up there and her phone number up there if you want to reach out to her and have a consultation with her. But more, outside of us, and I'm just going to be candid. There's agents who were just beginning in our process, and we're still trying to build our business, and hiring you is probably overkill. But that doesn't mean that you aren't perfect fit for our clients, because it's one of the things. When I talk to my clients, I ask them 2 things. One, do you have a will and trust? Who are you using for your estate attorney? And I'm amazed on how many people don't have that. And then 2, I talk to them about their accountant and their tax strategies. And they're like, I got so-and-so. I've just been using them for years. or I've been just doing it myself. At what point do you become that resource for us for the win of saying, hey, you're at this point in your lives, you're at this point with your businesses or your investment properties, you really need to have a sit down conversation with Cindy's team.
They should do that anyway, no matter where they're at in the process of their life or investment properties. Because what happens is they put a judgment on my fee. What they don't know is what they don't know. You don't know what you don't know. So you've got to be talking to me to find out what you don't know. So at least have a conversation. Then if you decide to not stick with me, I've still educated you. That's what you need. You need education because you don't know what you don't know what you don't know. So the real estate agent, if they're single and they're just starting out and they're young and they're not married, chances are they may not need me, but I could still do a basic conversation to get them at least start to looking at things like how can I make more things tax deductible, right? If you're married and one of you are starting out as a real estate agent, if I can teach you everything I want to teach you and you've not done great, that loss is going to offset the spouse's W-2 income. That's the great thing, and that's what people don't realize. As an investor, let's say I've got a rental property, but I've got a W-2 of 150,000. If I can teach you how to run that rental property as a business, I'm going to teach you how to run it as a business. So now think of the things you're already paying money for. You already pay money for cell phone, internet, auto. If I can teach you how to legally maximize that deduction, now we've just offset that.
Well, and also what is going to happen, a lot of people don't understand it, is the common belief is, hey, we have a rental property, let's throw it into an LLC. But we're not conscious of how money flow is going back and forth. And then, God forbid, something horrific should happen on that property. A kid drowns in the pool, and you think that you're protected because you've got this shield called an LLC over the property, but you haven't handled funds properly. And that LLC can, at the end of the day, become worthless if you ever go to court.
Yes. So I'm not an attorney, but for tax purposes, what I do is I would have you start an LLC as a holding company. Okay. Then the owner of this LLC that holds my property is my holding company. Okay. And it's not simple. It's a little complicated, but once you get it, it just stays the same. And then every time you buy a property, it stays the same. So you're the manager of your LLC that holds the property. The member is your holding company. That gives you two layers. But I had to hire an asset attorney so he could get my estate all squared away. And I thought I knew it all, and I didn't. Yeah. It takes a lot. That's just the basic, because that's how I'm going to do your tax return.
Well, and that's the benefit for us is we've got a great estate attorney, and we'll have conversations. But I'm always having them have conversations with our state attorney and you at the same time. And sometimes you and Jason go a little bit back and forth. And going back to the 3-pack, that's where we sometimes create all of our legitimacy and credibility, because we're talking at a different level.
And you just heard Cindy say exactly what we were talking about at the end of that presentation, which she says, "Oh, well, I'm not an estate attorney, so that's a whole nother aspect." There's probably 4 or 5 different intelligent people that you need to have in your world if you're structuring your business along that line.
Yes.
Because it's tax planning, it's estate planning, it's there's just so many individual
And it's
pieces.
my rec tech smoker, so I got Nick. He's on that top 5. How many texts you get from me? I'm about to smoke, and it's the same thing.
Sorry, I was coughing. I've had a few people actually confer me as their meat consigliere. So as much as you want to reach out, please do. I'm like Cindy, but not for taxes.
All right, we got a couple minutes left. What are we missing, or anything else you want to highlight?
No, just keep track. Find a way to keep track. And if you're bad at keeping track, if you don't have a shoebox, at least get it in a folder. The beauty of credit cards and different things now is it'll say QT gas or Safeway gas or Fry's gas, right? So gas receipts you don't have to save if it's specific, right? But everything else you need to save and keep track of. Documentation.
And they should talk to you because there's ways in which they could calculate an anticipated annual with only having maybe to track a shorter period of time. There's so many different things that you might
Oh,
recommend
yes.
along. Well, and again, I'm not saying that is, hey, don't do this, do that, but that's just a simple benefit of having a conversation with you and getting put in line with where down the road you're already there. Everything they've done is now prepared for you to enter when they get
Yes.
to that point.
Yes.
And I think that's really the most important part is have the conversation today
Yes.
and then come to the realization today, maybe you don't need Cindy today, or she will come to that decision, but she'll show you how to plan everything moving forward so that at that time you're ready to go.
Yeah, exactly.
Well, and if I get your tax return and I look at your back years and your guy or gal is paying the kids in the Augusta rule and it looks like we're maximizing everything, I'll be really honest. I'll be like, hey, they're doing a great job. You don't need to move. Like, stick with them. They're doing a good job. Like, I'm not going to go take it from somebody else if they're going to do the exact same thing.
All right, Cindy, we appreciate your time. Incredible stuff. We have Cindy's information up there, her email and her phone number. Out to her whether you want to talk about your own personal taxes or you want to get to know her, and you think you might have a client or two that would benefit from a meeting with Cindy. So appreciate it as always, and
Thank you,
leave
Cindy.
everybody with the
Appreciate
quote of the day: "Hustle in silence and let your success make the noise." Appreciate everybody joining us. Go out and sell a home.